We get asked about under-the-radar apartment markets all the time. I'm not sure that it's really possible for any promising spot to stay under the radar, but here's one previously ignored market we've recently started to like a lot. Drum roll, please. It is Reno, Nevada. We'll take a look at the area's evolving economic structure and stellar apartment stats on this edition of Apartment Market Dynamics from MPF Research. I'm Greg Willett. We have a new face joining us today. Welcome, Chelsea LaHue.
Thank you. Glad to be here.
Chelsea, when I think about Reno, and gosh, I just do that all the time, I see gambling and hospitality as the traditional pillars of the local economy, but there's really more to the story, right?
Definitely. There are tons of factors influencing companies' decisions to move to Reno. These include less government regulation, inexpensive clean energy, low taxes, and substantial tax incentives that Reno is offering. There's also lots of land in Reno, and by Western U.S. standards, it's relatively cheap. That positions the area as a good choice for large factories, warehouse and distribution operations, and data centers. The list of firms opening operations in Reno recently is impressive. Names like Apple, who is currently expanding their campus, Zulily, Petco, Jet.com, and Rackspace and Switch.
Chelsea, it's an impressive list there, but there's a big dog that you haven't mentioned yet.
Definitely. The real headliner is Tesla. They're building a 5.6 million square foot campus. It's only an eighth of the way complete and is employing between 300 and 400 people, not including the construction workers. They'll ultimately expand Reno's workforce by 6,500 people by 2020. These companies are bringing in tons of employment opportunities.
Those are some tech giants there, Chelsea, and that usually means small business growth also.
Yes, there's a cluster of small firms emerging now. It's called Startup Row, a strip of a couple dozen entrepreneurial businesses concentrated along First Street downtown. And that's not including the roughly 100 people who office at Reno Collective, an open concept atmosphere where people can come in to get work done in a collaborative environment. Startup Row is really showcasing Reno's transition to the tech sector.
That all sounds like hipster heaven to me.
Definitely. It's bringing a new community-centric environment to the area, and in turn, the urban restaurant and entertainment scene is booming. And you know it's an up-and-coming area when you start seeing breweries pop up.
Yeah, let's move away from that and go to what's happening in the actual apartment market. When Reno's economy began to take off in this cycle, the local apartment market was in terrible shape, actually. With close to a fifth of the metro's total jobs lost in the Great Recession, vacancy rates went to double digits in the apartment market. Now, occupancy got back to the essentially full mark around the middle of 2012, and right now it is tight, 97.7%.
Since occupancy recovered, effective rents for new leases have been climbing at an average pace of about 5% annually. The most recent results were the best seen so far in the cycle. Rents were up 8.6% year over year as of Q1, led by a 12% increase in Class A rents.
So where we go from here obviously is going to be influenced by how much construction gets going. You talked about huge amounts of land to build some commercial employment facilities. That also means lots of land available to build apartments.
Correct. Right now, ongoing construction is limited to properties totaling around 1,100 units, representing near-term inventory growth of only 3%. However, it's easy to envision building getting out of control fairly quickly, especially when the existing stock is only about 38,400 units.
All right, so just making this video, we've probably done our part to get this market into overbuilt territory. It's quite enough for a single edition of Apartment Market Dynamics from MPF Research. I'm Greg Willett. She's Chelsea LaHue. Thanks for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.